Well, let's get to our small cap of the day, and we're heading for the 3D space. Pointerra was described by one of my guests on the call last week as the pro medicus of 3D geospatial data. That was Andrew Page. He says it's looking very interesting at current levels and has recently dipped his toe back in himself. It also sparked Claude Walker from a Rich Life's interest as well.
Because the 3D data is, so information rich, it's also got some challenges with storing and also being able to sort and analyze easily. So that's the area of innovation there. And look, I have to say, it has in its most recent quarter just switched over into operating cash flow positive. And it's been even the last year, it's kind of been at that break-even level, which I think is a really interesting time to come and have a look at these kind of growing tech companies.
They are easily on track for 50 million in sales by FY25. They're growing. Their annualized contract value doubled in the last 12 months. Cash receipts moving in the right direction, as Claude said. Positive operating cash flow, massive optionality. It's sort of this tech that's being used by utility companies and building digital twins and the rest of it, but it's got military applications, it's got metaverse applications. You've got anyone who's doing anything with 3D geospatial data as a potential to do this, and this is kind of like the company that will host all of that data for you on the cloud. It's the pro medicus, if I can say that, of 3D geospatial data.
So, as we are wont to do, we got in touch with Pointerra's MD Ian Olson to talk us through the business, and he joins us now. Welcome. Thanks so much for joining us. One of the things that Andrew Page there
Thanks for having me.
talked about was tech optionality. So he pointed to, military, the metaverse, all these other applications that perhaps you're just sort of getting into. Talk to us about the blue sky for this 3D data analytics.
Sure. Well, thanks for having me. It's great to be able to speak to your audience again. I guess the blue sky for 3D data, 3D data has been in the commercial sector since it was declassified from the US military, well, the aerial LiDAR in any case, since the mid-90s. And our business exists because turning that data into information, so solving problems, asking questions using 3D data, was a very complex and remains very complex, time-consuming problem. Lots of desktop software applications, lots of really technical folk, and our business has existed since 2015 because we took some proprietary IP, we put it in the cloud, and we've built a cloud solution that simplifies that really complex series to get information from the data. And so we think we've got the world's fastest solution for turning data into information in 3D land. And what we know with the autonomous vehicle community, who are everyone ex-Tesla, and we think they'll get there one day, are bristling with LiDAR sensors. You've got planes, helicopters, drones, backpacks, tripods. Tens of thousands of people all around the world get out of bed every day and go and scan the world in 3D. And they do that for a reason, because other people want to manage the world in 3D. So you hear a lot of talk about digital twins these days, and that's a great way of describing what it is we do. We help businesses create a digital twin of the physical thing that they care about, whether you're a power utility or a mining operation or a department or running a road network. And as you know, I think we announced recently that we've got about a petabyte of data on our platform. We've built the world's largest multi-client platform of 3D data, and people pay us to host that data because we solve a bunch of problems for them. We simplify the really complex task of getting data and analyzing and asking questions about it. We've got a subscription model that allows our customers to come and go as they see fit. But I think if you looked at our last few quarterlies, you'll see that we've been able to demonstrate some sizable growth quarter on quarter in terms of our ACV, which then obviously flows into revenue and cash. And the direction and the trajectory for the generation of 3D data is only going in one direction. So for us, we think we were first to market with a cloud solution, and we think we think our moat is significant.
Good. Okay, so we'll get into the moat in just a second, but your ACV, you mentioned it doubled in the last 12 months, operating cash flow positive as well, and I understand you've got a target for $50 million in sales by FY25. How will you achieve that metric?
Sure. So our biggest customer and our biggest market at the moment is the power utility sector in North America, And but we've got six target sectors: the surveying and mapping groups who generate 3D data, the AEC sector, architecture, engineering, construction. They're the guys that use 3D data to design and build the physical world. And then you've got the different categories of asset owners and operators. So mining, oil and gas, utilities, which is power and water, road and rail, and defence and intelligence. So in terms of getting to 50 mil ACV, expressed in US dollars by FY25, we think we'll get there probably 12 months ahead of that. We see each of those target sectors has at least 50 million US in total addressable market in the North American market, which is our big focus. Probably 80% of our current revenue and customer base is North American. So we think we could get there from the utility sector alone. So I heard one of your presenters talk about optionality in our stock before. Well, we've got optionality in our different market sectors, and the AEC is the biggest one. It's probably 200 million US ACV total addressable market. So we've got lots of routes to grow our ACV. We're trying to add sort of $1 to $2 million a quarter, and we're doing that by adding new customers and getting existing customers to grow their spend with us.
Mm-hmm. Okay, so you will be opening a US office and you're beginning operations in the UK. Will you be able to service a wider sort of footprint from, the UK and the US actually for that matter as well? Yeah.
Sure. I mean, we were fortunate and we went to the US in 2018, and when COVID hit and, obviously everyone changed the way they did a lot of things, we had a team on the ground there, but that team's grown fourfold since then. And I was actually fortunate enough to be back in the US throughout February, March and a bit of April, and which, I hadn't been there for a couple of years, met a whole bunch of staff and customers that I'd never met before. And we opened our office in Virginia, which is just outside of DC. The Virginia area is the data center capital of the world. Something like 80% of the world's internet traffic and data flows through the data centers that are located just outside of Washington, DC. So that's where we're based from. Our global head of revenue, Dave Lowe, who has been based in Queensland, he's heading over. In fact, he flew out yesterday for a couple of months in the US, and then he's going to spend 6 to 9 months there after coming back in August. And we're talking to some people in the UK about establishing an office either in Ireland, which perhaps is a better geopolitical opportunity for servicing Western Europe than the UK market, or the UK as a base in a post-Brexit world.
Got it. Now, share price. So both of my guests that you heard earlier on the call mentioned when I think it was Bevan Slattery bought in and the shares went to the moon, and there was lots of people talking about Pointerra. Share price is coming off, and it has been doing so over the past year or so. Part and parcel, I would imagine, getting caught up in some of this sell down that's happening in tech names as the interest rate environment changes. But if I'm an investor looking at Pointerra, I mean, where do I look for the potential next catalyst?
Sure. So I think a lot of people are hoping and are hopeful that we're going to be able to generate some news flow around the intelligence and defence sector in North America. That's something we've been working on for a while. You can't put all your eggs in that basket, but we've got an appropriate investment from a BD and go-to-market perspective there, and some of the things we're doing, which we can't talk about, we hope to be able to translate into contracts and things we can talk about in the marketplace. But generally, if you look back at our history, we've been very careful with our capital management. We've been very careful with our capital structure. We've grown a business that's getting towards 20 million Aussie in ACV in a recurring sense. We've raised something like 12 to 13 million Australian dollars to get here. So we as a group of owners and founders who own about 40% of the business, we're in a hurry and we're very ambitious, but we didn't want to create one of those tech companies that was chasing revenue and was burning cash, because when the cycles turn, as we're seeing now, you don't want to be in the market raising money. So we've had cash flow positive quarters on and off for the past 4 or 5 quarters, and so we've got, I think we told the market in our last quarterly that we've got a business that's capable of sustaining the sorts of growth levels that we've seen through our earnings and our cash flow. And whilst the percentages get smaller each quarter, it's as the base gets bigger, if we can add $2 million US a quarter, then you don't have to look very far to see how we can get to 50 mil ACV and then beyond. And as our costs start to flatten out relative to revenue, we've made a significant investment from an R&D perspective in AI. So our analytics and our secret sauce, if you will, was principally a bunch of human-generated algorithms, but we're now adding an AI layer around that. So we expect to be able to scale the business without needing to hire tons and tons of people. We'll just instead use lots of compute, and obviously that's compute doesn't have big weekends, doesn't get COVID. And we think we can create a very high gross margin business as we scale out revenue.